Hello, everybody. I'm Anne Simpson. I'm delighted to be joining the Corporation of London for this event. And it's my pleasure to be really talking to you for a few minutes about the investor dilemma of the day, which is divestment or engagement. And when I was thinking of a suitable reference point really coming from London, it has to be the clash. Should I stay or should I go? Which I'm sure you were all bopping around to in 1982. So the question for divestment on climate risk, once we've acknowledged it's an investment risk and we have a fiduciary duty to address it, what do you do in response? So one response, and divestment feels quite appealing here, is that you walk away. You say, none of this stuff, we'll sell it and walk away. We can sign up for a net zero initiative and our portfolio looks much more green because we've disposed of high emitting assets. The problem with that when you divest is, of course, all you really do is sell to another investor. So the emissions out there are not actually going down. You've just played a financial game of pass the parcel, in this case, with a big risk being passed around the financial markets. So we're not dealing either with the systemic risk of climate change. We really have got to think about how do we get those emissions down. The other problem we've got with divestment, from a CalPERS point of view, is even when companies themselves are disposing of assets, if they get transferred into private markets, there's a sense that, well, if it's out of sight, maybe it's out of mind. And that's really posing a challenge for regulators and for investors about where do we see what's going on in private markets. And for that reason, CalPERS recently launched the ESG Data Convergence Project with a broad group of LPs and GPs to start getting information in private markets. So divestment is not as simple as it sounds. It does have its place, and CalPERS has divested from, for example, thermal coal. But let's talk really about engagement, which is harder to do, but at the end of the day, we believe is going to actually get the results that we need. So what do we mean by engagement? It's a rather polite term for really exercises the rights and responsibilities of ownership. So the first question when we're looking at a big, complex systemic risk like climate change is, well, where do we pay attention? So we did a data exercise and found that in our 10,000 or so public companies, less than 100 were responsible for the vast majority of emissions. So that means we can be very focused in where we target attention. Next point, once you've got the data worked out, is partnership. We need to team up with other fiduciaries to overcome our tragedy of the commons, which is we're all diversified, we think, to manage risk, but with a systemic risk, we've actually got to link arms and find a way to work together to overcome it. The third question with engagement is, well, how do we know if it's working? So the 100-plus companies that we'd identified in our first ever carbon footprint has become the basis for forming Climate Action 100+, which is now supported by investors responsible for close to $60 trillion. So in terms of finding a message that we can rally around as fiduciaries to take action, it's a success. But the question is, what are the results? We've asked these companies to do three things. One is a governance request. We want boards that are climate competent, aligning their political lobbying, their compensation, and their planning for a just transition. And if boards aren't responding, we're willing and able to back new candidates to the board, as we saw at Exxon this year. The second thing, though, is we've got to say, what does it mean if these companies actually make the net zero commitment that we're asking for? So I think here we turn to the data providers for the answer. The 111 companies in this focus list for Climate Action 100+ have set net zero 2050 commitments. We've still got some more to work on, but this is the first results of our engagement efforts together. If we can hold these companies to that transition plan, it represents 25% of global emissions, or about the annual emissions of the whole of China. So we can get real impact from an engagement strategy. So the tricky thing will then be, how are we going to mark progress? So for that reason, we've developed a net zero company benchmark so we can track the alignment of CapEx. This is critical, like where is money being deployed towards that net zero target? And we're also calling for the integration of climate risk into corporate reporting, which is standardized, regulated and overseen by the audit committee and signed off by the auditor. So guess what? The bean counters have never been more important. With this, we genuinely believe that engagement is going to get us the results that we need. It's not easy, it's tough, and it's not immediate, it's long-term, but we can't simply offload emissions to other investors, which is ultimately what divestment leads you to do. So with that, CalPERS is an engagement advocate, and we look forward to making progress with all of our fellow fiduciaries. Thanks.